Someone wants to know if I'm considering a fundamentals before I do my analysis. So my answer is simple, guys. It's simple and it's straightforward. I don't trade fundamentals, not all the time. I've got my partner, because we are two at NzdChf management. I've got my partner who deals with fundamentals, and I've got a lot of people on our group who deals with fundamentals, the like of Savel or the likes of a lot of people there on our groups that deals with fundamentals. I don't know why they stopped sharing when it comes to fundamentals. Like today we got CPI. I don't care much about the fundamentals because I don't trade fundamentals. What I do is I do my analysis, and then in my belief, I believe that fundamentals follow technicals. Whatever is happening during fundamentals, the technicals will even follow after that. So for me, fundamentals follow technicals. So I prefer staying with my technical analysis, and then my man Brown focus on fundamentals and I focus on technicals. So it's easy for us to do that. It's easy for us to trade like that. So even give us the heads up whether the fundamentals are coming. Like I said, I don't know why you guys stopped sharing, why some of the guys stopped sharing the fundamentals things. But yeah, we do. I don't follow much about fundamentals, but I do my technicals. All right, thank you very much, guys. Any more questions? Cool. So this is my analysis on NZD Swiss franc. Why do I say this thing is a buy? We need confluences, guys. We need confluences. Why do I say it's a buy? Who can tell me why we are buying there? So this is the previous high. This is the new high, right? This is the previous low. This is the new low, right? This is the high that was taken out by this one, right? Look at this lows. So it's simple, guys. The highs and the lows keeps getting higher, okay? Mr. Joe, thank you very much. You said the bullish flag as well. This is a bullish continuation pattern, the bullish flag. So why do we say it's a bullish flag? A flag needs to have like a pole. So from here going there, it's a pole of the flag. So it's an impulsive move. So every time you see an impulsive move, you should think about the correction after that, right? So this is the impulse move going there, and then it breaks this high. Thank you very much. The highs are keep getting higher, breaks this high to create a new high, which is there. So what is price doing now? Price went back to test. And then when price is going back to test, the confluence is when price is going back to test, it's forming what? It's forming a pattern. Which pattern is that? That is the flag. So this is the flag pattern that price it formed, right? So if the price formed a flag pattern like that, so look at this. If you label this here, this area here as your A, and then here you write your B, and then here is gonna be your C, and then somewhere there is gonna be your D. So we're gonna be saying the AB is equals to CD. A and B is breaking the previous high to form a new high. B and C is the retracement of the A and B, right? And then C and D, it's your entry. C is going to be your entry, and then D is going to be your exit. So let me repeat that nicely. A and B, it should break the previous high. And then B and C is the retracement of A and B, okay? So C and D, it's where your money lies. That's where your money is, okay? So we go in at C, getting out at D. The strategy on this one called the ABCD. AB is equals to CD. So when I say I have confluences, when I say I have confluences, this is what I mean. We have the ABCD strategy. The highs and the lower keep getting higher. It's going to break the previous high, right? And then the BC is going to be your retracement. The C and D is going to be where your money is, right? So it simply means you're going to like measure, like, if you don't want to, like, for example, on this one, we don't want to get out here because we know that price is not going to respect that one. Because if you pull this one here from your AB, is there, it should be approximately equals to CD, which is there. So for you to get your take profit, you need to go as far as back. You need to scroll back to find the nearest high after this one. So because price is not going to respect this one. So you need to find the nearest high after that one, which is this high here. But looking at the block here, that's when I wrote the block here to make our things easy for us to get up, okay? So that's when we get up. So I'm not sure if I answered your question. Swiss franc JPY, we see number one, based on weakness against strength, we see a weak Swiss franc. NZD Swiss franc, we see a weak Swiss franc. So this is the story. This low here was taken out by this low, and then price went back to retest where it meet the trend line, which is price bounced there, it bounced there, same area as that level there, and then the fourth time is attempting to bounce there. That's when we take advantage of it. We want to sell it going down from somewhere there on that area, right? So the confluences that we have on this one is the trend line, yes, number one. Number two, this low was taken out by this low. Number three, this thing here was an impulse going down, impulsive move going down. And then look at this movement going up. It's the correction, right? It's correcting what? It's correcting this move. Another thing, high and the lows are getting lower. Thank you very much. It formed a new low. What is price doing now? It's retracing what? This breakout of this low. So when the price retests to that level, when it's retracing like this, it's going to form a pattern. That pattern is going to be a bearish flag now because it breaks the lows. No longer, it's not going to be, not like on the NZD Swiss franc where it's going to be a bullish flag. This time is going to be a bearish flag. So this bearish flag, it got confluences. Another number one confluence is the trend line. Is the trend line strong? Yes, the trend line is strong. Price bounce on a certain level. The stronger that level is, it should bounce like 3 times or more for us to see whether it's a strong trend line or supported resistance. You draw a trend line like that. Another trend line like that, going all the way up there. See, the only thing to confirm that it's going down is once it breaks this trend line here going down. Okay, that's when we look at we have the confirmation that okay, it might be if it breaks here going down. Now we are having a conversation, a confirmation. Sorry, a confirmation that okay, this pair is gonna be going all the way down. What's confusing me now is this thing here. You look at this level here, going there. Right? And then you look at this one here on this trend line. And then look at this highs here, taken up by that highs. So it might be still be going all the way up to that level there. That's what is confusing me about this payment. But on weekly, it looks like it's gonna reverse all the way down. But on H4, remember H4 is still in a higher time frame, right? Okay. So it looks like we are on an uptrend. So it's between me and you now. It's between us to decide which scenario are we going.
Yeah.
Which scenario are we going with?
Can I ask something? So
Yeah.
what would be the best time frame to choose to trade in? Like, doesn't matter, or which one do you mostly have the most accurate?
All right, sharp. We need to have confluence. We need to have more. We need to make our analysis on higher time. H4 going up is a higher time frame. It's higher time frame. We need to do our analysis on our higher time frames, right? And after we make our analysis on higher time frame, the thing is the market respect the support and resistance and the trend lines of higher time frames. Okay. So you need to start on a higher time frame when you do our analysis. So what I'm trying to say now is we need to come to the decision whether we are selling, we are waiting for it to break here and then wait for it to retest that level and then sell it going down, or we just simply buy it there going up based on the trend line. All right.
Yo, if it's like this, it's really confusing, right? Because I think maybe you might as well wait for it to break rather than buying. Buying, I see buying more riskier
I mean,
than selling.
it's more riskier because thank you, because we are on the on a weekly trend line.
Yeah, yes, yes.
Buying is more risky because we are on a weekly trend line. So now we can, what can we say? We can do this. We can see if we we go a little bit lower. Remember, we are from weekly. We saw that now it's at the weekly trend line. So now we are at H4. It's at the weekly. It's at the support of H4, right? So let's go to lower time frame and see what we can get there. Let's say H1. We'll see what H1's available. So
Yes, that's what I've been seeing on 30 minutes and H1. Hey.
So this is what we'll get on H1.
And that is even good enough for it to break that trend line. That's why I shared on the group the setup on
Okay.
my analysis.
Okay, now we'll go back and look at the history, what it's been doing, right? So it changed the structure here. It went back, but did not retrace all the way up to 61.8 of our FIBO. And then it breaks this low again. Break this low, form a new low. It did not retrace all the way up to 61.8 there. Now it breaks this low, form a new low. This is the retracement. So what are we risking? We are risking a sell. Right? Because it's gonna be like a short-term sell, possibly. It's gonna be a short-term sell.
The more you do it, this one got patience. I can take patience.
So if we're risking a sell, our stop loss is gonna be, let's say we are selling it now, our stop loss is gonna be there. And then our take profit is gonna be somewhere there.
Yeah.
Right? So we'll be risking like a nice sell there. With it. So this level here, we don't, before price touch that level there, it has to hit our take profit there. Right? It took out this low, it took out this low here, this low's here, as you can see there. Form a new low. Yeah. Now it's forming like a bearish flag, a bearish flag, which is correcting, it was correcting that, and then it continued going down. So to answer you, Mr. Richard, is that we first went to higher time frame, which is weekly, and then we see that if price is at the strongest resistance or strongest, if it is the strongest resistance on the trend line, it's more likely to go down. It's gonna turn and go down because it's on a strong level. Okay. So on higher time frame, we look more into the sales. You understand? We add more sales going down, more sales going down. Okay. Another thing you should do, you look at the behavior after that breakout. Once price break here, like it did break here, it breaks here, and then what is it doing from the new low? What is it doing after? It's correcting. This thing we call it correction. Correction. You see, consolidation before it can continue going down. So all this time you'll see an impulsive move going down, and then you should see like correction, something like this, before it can continue going down. So you'll be taking advantage of that correction. After that correction, you're selling it there going down. So let me quickly show you on NASDAQ. Because yeah, we made a lot of cash on Nasdaq, Nas 100. We're still holding a style there. Let me just show you how this thing here, how we did with this Nasdaq, what we did with this Nasdaq thing. H4 I shall bring. So there it is. As you can see, what I did said was this, man. Okay, here I just said, okay, this low was taken out by this low. So price should do what? Price should go back and test before continue going down. Okay, so we took advantage of that. So once price reach this level here, you can pull your Fibo from here, Fibonacci from here to there. You'll get your 61.8 here, and then you're selling it going down. You can wait for price to form a bearish flag, which is this one, sorry, bearish flag, which is this one. Where your pole of the flag will be this one here. And then this is your flag, bearish flag, price will continue going down. There's a continuation pattern. Price will continue going down. Okay, another thing you can add, okay, we can add. So this one here, as you can see, I drew A, and then here is B, and then C. There is some strategy that we use, is called an ABC retracement, okay? And then the AB is equals to CD, is this one we have here. Okay, here is your C. So, like I mentioned this on Facebook, on our WhatsApp pages, WhatsApp groups, that it's a sell to buy scenario. Okay, so once it's reached this level here, it's now forming a head and shoulders. If you look at far left here, it's your shoulder, where this level here will serve as your head, and then we are waiting for another shoulder this side for us to buy it going up. So price took this one out from a new high, going back to test, but when it's going back to test, it's gonna form the ABC retracement, right? And then when it formed that ABC retracement, it should, like, before it formed A, it should have like a bearish flag to complete a B, C, right? C is always our entry. Right? C is always our entry. On an ABC retracement, this C, it's an exit of this B cell here. And then this C here will be our buy for this one here, which is going to be corresponding with the head and shoulders, which we have here. Okay.
So I just want to ask, like, when it reaches B, you don't enter